Imagine standing at the edge of a collapsing digital landscape where Shiba Inu, one of the most prominent memecoins, has just endured a 13% slide over the past 7 days. Yet beneath this decline lies a tapestry of on-chain signals suggesting that the tides may soon turn in favor of a robust recovery. The market's pessimism has been palpable. Traders have rushed for the exits. Profit-taking has dominated chat rooms, and bearish sentiment has spread like wildfire across social media on the surface. The breakdown of SHIB'S ascending parallel channel on July 28th appeared to confirm that buying momentum had evaporated, and the ensuing sell-off seemed to validate a narrative of capitulation, but if one peers beyond the immediate price action, a different story emerges, one of strategic accumulation by long-term believers and a growing cohort of short-term holders who are choosing to hold rather than flee. Data from Nansen reveals that whale wallets, those holding over $1 million worth of SHIB, have quietly increased their stakes by 4% in just 1 week, signaling a renewed confidence in the token's medium to long-term prospects. This accumulation by major holders often precedes a meaningful rebound, as whales possess the financial firepower to absorb substantial sell pressure, and their purchase announcements tend to galvanize broader market participation. Furthermore, into theoblocks, metrics show a 1% uptick in the number of short-term holders extending their tenure beyond 30 days. An important development, given that holders with less than a month of exposure are typically the most prone to panic-driven selling. Their decision to hold reflects a growing optimism among retail participants who, buoyed by whale activity, may view current prices around $0.0001246. It's a compelling entry point in this light. The confluence of whale accumulation and resolute retail holding creates a dual foundation of support that could underpin a rally toward the immediate resistance level at $0.000136. Yet, as with any potential rebound, risks loom large and demand careful consideration. The memecoin sector is notoriously fickle, driven as much by social media hype and meme culture as by fundamental or technical analysis. A single negative tweet or rumor of a centralized exchange liquidity issue could trigger renewed selling that overwhelms even the deepest whale wallets, sending SHIB plunging toward the next support floor at $0.001160. The volatility inherent in memecoins means that stop-loss hunts and cascading liquidations can ensue swiftly, wiping out short-term gains and denting sentiment for days or weeks. Moreover, broader market conditions play a pivotal role. If Bitcoin or Ethereum enters a corrective phase on macroeconomic concerns, whether due to hawkish excesses, central bank rhetoric, surprising inflation data, or geopolitical tensions, risk assets like SHIB are likely to experience amplified selling pressure. Regardless of on-chain accumulation, on the other hand, a broader market rebound could act as a catalyst, with inflows into large-cap cryptocurrencies cascading into altcoins and memecoins, amplifying the recovery effect beyond price mechanics. It is crucial to examine transactional and network health metrics to gauge the likelihood of a sustained turnaround. Shiba Inu's network activity, measured by transaction count and active wallet addresses, has shown tentative signs of stability amid the downturn, suggesting that the utility and community engagement underlying SHIB have not evaporated should this on-chain usage continue to hold steady or even tick upward. It would lend credence to the thesis that the current sell-off is primarily a short-lived repricing event rather than a fundamental loss of interest. Conversely, if network activity were to decline further, it would indicate that speculative fervor has waned significantly, diminishing the probability of a strong recovery. Liquidity in order book depth at key price levels also merits scrutiny, while the accumulation by whales bolsters bid-side liquidity. Any sudden spike in ASC's IDE orders, particularly from concentrated holders seeking to offload, could neutralize buying pressure and stall any attempted bounce. In addition, the behavior of derivatives markets cannot be ignored. A disproportionate increase in open interest on futures or rising short interest could create headwinds for a recovery, as leveraged players stand to amplify price movements through margin liquidations. Conversely, A drop in funding rates or waning short interest might remove a significant barrier, allowing the price to rise with fewer countervailing forces. Sentiment. Analysis derived from social media and on-chain. Signalers like Sentiment or CryptoQuant highlights the precarious balance between fear and greed. During the past week's decline, fear-related metrics, such as growing mentions of dump, sell, or terror in the context of SHIB, spiked dramatically. Yet this same spike often marks a contrarian entry zone when historical patterns are considered. Seasoned traders know that excessive fear frequently precedes a market reversal. As selling exhaustion sets in, and the last wave of panic-driven liquidations clears the path for new buyers, however, sentiment-driven rallies can be shallow and short-lived if they lack fundamental support, making the identification of contingency triggers like whale accumulation thresholds or critical network usage levels essential for navigating the potential recovery safely. Technical indicators provide additional layers of insight. The relative strength index, currently navigating around oversold territory near 30, hints at selling exhaustion, while the moving average convergence-divergence histogram has begun to compress, signaling that downward momentum may be waning. A bullish crossover of MACD lines or a rebound of RSI above 40 could serve as technical confirmations of a shift in trend, enticing momentum traders who have thus far remained on the sidelines. Yet technical signals in isolation can be misleading in low liquidity environments, underscoring the importance of confirming breakouts with sufficient volume, notably a spike in spot trading volume on platforms such as Binance or OKX, concurrent with a price test of $0.000136 would strengthen the case for a sustained rally, whereas a lack of volume might suggest that the move is a false breakout vulnerable to reversal. In evaluating risk management strategies amid this precarious landscape, prudent actors will consider scaling into positions incrementally, perhaps initiating a base layer of exposure at current levels, adding more if on-chain whale holdings increase by predefined thresholds, and setting staggered stop-loss orders just below this $0.00012000 level to guard against deeper sell-offs. Likewise, profit-taking could be structured in tiers, with partial exits around $0.001362, and further at $0.001450, allowing participants to capture gains while retaining exposure in case of a continued upswing. For those with access to options markets, protective puts could provide insurance against significant drawdowns, albeit at the cost of premiums that will erode returns if the anticipated rally materializes smoothly beyond speculative trading. Long-term investors may view the current dip as an opportunity to reassess the Shiba Inu ecosystem's fundamental value propositions. The progress of decentralized exchange ShibaSwap, the rollout of Layer 2 scaling initiatives, and the health of the token's development community. Positive updates, such as the introduction of novel staking mechanisms, partnerships with metaverse projects, or enhancements to cross-chain bridge security, could serve as catalysts, transforming a price correction into a springboard for renewed investor confidence. However, any delays or setbacks in these fundamental developments could sap enthusiasm, reinforcing the bearish narrative and potentially prolonging the downturn. Macroeconomic variables remain an ever-present backdrop. If global liquidity tightens in response to an unexpected interest rate hike, or if risk-off sentiment grips financial markets due to geopolitical flare-ups, memecoins like SHIB, perceived as highly speculative, are likely to be disproportionately affected. Conversely, renewed monetary easing or signs of a soft landing in major economies could redirect capital flows back into risk assets, reigniting speculative activity and providing the tailwinds necessary for SHIB to reclaim lost ground. The interplay between macro forces and on-chain data underscores the multifaceted nature of the potential recovery. It is neither a foregone conclusion nor an unlikely dream, but rather a scenario contingent on a confluence of whale behavior, retail sentiment, network metrics, technical confirmations, and broader market dynamics. In this high-stakes environment, participants must remain vigilant, continuously monitoring on-chain whale accumulation, short-term holder retention, network activity, order book depth, derivatives positioning, and sentiment indicators. They must also be prepared to adapt their strategies, swiftly increasing exposure if the predefined bullish triggers occur, or scaling back in the face of adverse developments to navigate the fine line between seizing opportunity and mitigating risk.